In 2021, the world watched as a dying strip mall retailer became the center of a financial revolution. We were told that the apes had won, that Ryan Cohen was the messiah of retail, and that GameStop would become the Amazon of gaming. But look at the map today. In January 2026 alone, GameStop shuttered over 470 stores across 43 states. Since the meme stock frenzy, they have abandoned entire countries, exiting Canada, Germany, Italy, and Ireland. The once mighty empire of 6,000 stores has been hacked down to a lean, skeletal 2,200. But here is the twist that nobody, not even the most aggressive short sellers, saw coming. While the storefronts are dying, the company's bank account is exploding. GameStop is currently sitting on a staggering $9 billion in cash and liquid securities. They are earning more from the interest on their bank balance than they are from selling video games. This isn't just a retail story anymore. This is the story of how a video game company committed corporate suicide to be reborn as something else entirely. Welcome to the Case Files. To understand the tragedy of 2026, we have to look at the peak of 2005. Back then, GameStop was the gatekeeper of culture. If you wanted the new Halo or Call of Duty, you stood in a line that wrapped around the block. Their business model was a gold mine. Buy a used game for $5, sell it for $35, and pocket a 600% margin. In FY2025, that software revenue, the very heart of the company, fell by a catastrophic 27%. Why? Because the physical disk resistance lost the war. By 2026, console manufacturers have almost entirely phased out disk drives in favor of digital-only Pro models. When a customer buys a game on the PlayStation Store, GameStop gets exactly $0. Ryan Cohen knew this. He has spent the last 3 years ruthlessly cutting the fat. Since 2024, the company has slashed selling, general, and administrative expenses by over $200 million. He didn't try to save the stores. He used them as a strategic organ donor. He closed the underperforming ones, liquidated the inventory, and funneled every cent into a massive war chest. By the end of the 2025 fiscal year, GameStop posted a net income of $418 million. On paper, they are profitable for the first time in years. But look closer at the numbers. That profit didn't come from selling Xboxes. It came from $271 million in interest income, and a measured bet on Bitcoin that is currently valued at $368 million. The core retail business, the 2,000 stores still standing, is essentially a break-even operation. They're keeping the lights on with Pokemon plushies and Funko Pops, which now make up nearly 30% of their total revenue. The game in GameStop is now a side hustle. The real business is the $9 billion acquisition engine. In January 2026, Cohen told the Wall Street Journal he is looking for a diamond in the rough, a major public company to acquire. He is essentially following the Berkshire Hathaway playbook. Take a dying textile mill, or a dying game store, and use its remaining cash to buy better businesses. But for the 12,000 employees still wearing the GameStop lanyard, the tragedy is real. They are working in an ecosystem that is being harvested for parts. The stores are becoming ghost warehouses, serving as local pickup points for online orders until their leases inevitably expire. The lesson for every business owner watching this is cold and clear. Adaptation doesn't always mean fixing your product. Sometimes adaptation means admitting your product is dead and moving the money before the ship sinks. GameStop didn't win the industry war by selling more games. They won by realizing they weren't a game company anymore. They are a $9 billion hedge fund with a retail mask. And that mask is falling off. The era of the physical game disc is over, but the era of the GameStop war chest has just begun. What should Ryan Cohen buy with his $9 billion? A logistics firm? A software studio? Or should he just buy back more stock? Let us know in the comments below. If you want to see how the world's biggest companies really work, subscribe to Corporate Case Files. Class dismissed.